Hi, I'd like to spend a few moments today talking to you about digital financial reporting. This is, for me, one of the more exciting developments in financial reporting in Australia at the moment, and I very much do see this as pushing financial reporting into the 21st century. The reason why this is perhaps interesting or exciting at the moment is that we've recently had the Parliamentary Joint Committee on the Role of Auditing in Australia has issued an interim report, and in that they recommended the mandating of digital financial reporting, or XBRL reporting, in Australia. And more recently, we've had the CFOs of the G100 companies making a statement that they were opposed to such a development because they saw XBRL as constraining the ability of companies to portray the firm's performance the way in which they wanted to portray it. So I think we need to have a bit more of a careful discussion about digital financial reporting, and that starts off with, what is digital financial reporting? For most of us, digital financial reporting represents the adoption of extensible business reporting language, or XBRL for short. In essence, XBRL is a system of attaching tags, labels, data descriptions to line items that appear in financial reports. To facilitate this process and to ensure standardization, the IASB has developed its IFRS taxonomy, and needs to say that is consistent with the standards issued by the IASB. And as Australia follows international accounting standards, then it is only sensible that we would also adopt the IFRS taxonomy. This taxonomy has already been adopted in a number of countries. The European Union has moved to it now, Singapore, Korea, Japan. And whilst the US does have XBRL reporting, because they don't use IASB standards, they have the FASB standards, they of course have a slightly different taxonomy. If you're really interested in this, can I suggest that you might go to the IRFS website and look at some of the documents, some of the information they've prepared and made available on their website about what XBRL represents, and in particular about the IRFS taxonomy. The first concern which some people have expressed is that digital financial reporting will change the world. Well, no. It's not going to change the world, and it's not going to change the format of general purpose financial reports. IRFS standards dictate the format of general financial reports. This is provided in IAS 1, Presentation of Financial Statements, IAS 7, Statement of Cash Flows, and I think it's instructive to note that there is nothing in the adoption of XBRL reporting which requires amendment or adjustment of these two standards. XBRL does not change the format of general purpose financial reports. I would note that in some countries there are constraints on non-IRFS performance measures. In Australia, for example, we have RG 230 issued by the Australian Securities and Investments Commission, but once again, that's not going to be impacted by XBRL. XBRL is only concerned with accessibility, being able to extract data, being able to understand data. And to me, that makes the adoption of XBRL a very obvious step in the development of financial reporting. Why should we change to digital financial reporting? I think we need to think about this long and carefully, and in doing so we can probably divide the users of financial statements into two categories. We can talk about the unsophisticated users, the mum and dad investors, and I think we'd have to admit that general purpose financial reports are long and complicated, and giving an unsophisticated user such a financial report is a bit like trying to give Macbeth to preschoolers. It's just not going to be well understood. However, with XBRL and the tags that are included, which provide an explanation of line items, this may enhance the ability of users to actually understand the financial reports that they receive. This is an important step in democratization of access to financial reports. And whether we like to think that we have to talk to non-sophisticated investors, I think it is important that we do make some efforts. We can't simply ignore them. And this is a good starting point. Sophisticated users, they're likely to see enormous benefits from XBRL. Sophisticated users undertake detailed analysis, and this requires extensive data. At the moment, they rely upon data aggregators who collect information subject to their own rules, and it's subject to error. XBRL would facilitate the extraction of a very large amount of data in a manner which was very cost-effective and accurate. And that has to be something which all sophisticated users of financial reports, regulators, analysts, lenders, everybody, would have to advocate strongly for. These users already reformat the financial statements and adjust them to suit their purposes and their decision-making processes. For example, if you talk to an analyst, don't tell me that for the last 20 years that they haven't been adjusting financial statements for the impact of non-cancelable operating leases. That was adjustment one that everybody made. There are others which are more nuanced. I personally have never had any affinity for equity accounting, which I've always thought as being quite theoretically flawed. And so whilst I'm not very good at doing equity accounting, I'm particularly good at undoing the effects in financial statements. And there are going to be a whole range of other accounting practices that users may or may not agree with, and will make adjustments, and they'll reformat the statements in a format which suits them. The key point here is that this is already going on. All we're trying to do with XBRL is speed up the process, and that has to be a positive. Now, some people will say, oh, but what about the costs to the preparers? Yes, there are costs to the preparers. However, these costs are diminishing as software providers develop products. For example, a lot of people already use a piece of software called Caseware to convert account balances into general purpose financial reports with all the notes. It would be relatively straightforward for these software providers to include the tags in the template financial reports that they generate. That's not a significant cost. There are also software providers who have been doing this overseas, in the US for over 10 years. So what I'm saying here is that the costs of adding tags to financial reports is likely grossly overstated. We also need to recognise that there may be some benefits to companies, and a critical issue is what is the relation between these costs and benefits. For example, there is extensive evidence that the introduction of XBRL reporting increased analyst forecast accuracy and it increased informational efficiency in markets. Both of these would likely lead to a reduction in the cost of capital, and in these circumstances the cost savings or reduced cost of capital, because of the size of these firms, would tend to vastly outweigh any costs of preparing such reports. So at the end of the day, what we're probably talking about is that what should be the net cost for preparers, and it actually might be a negative cost, not a positive cost. It might reduce their costs. So I think the arguments against XBRL reporting are a little bit disingenuous and a little bit misleading in parts. And I think that digital financial reporting is a path that we are going to have to go down, and that is something that all of us, I think, in the accounting profession can look forward to.